Welcome to Crypto DeFi Daily. It's August 25th, 2025, and today we're following the money.
So, the big question on everyone's mind is, where's the smart money actually moving? Well, we've been tracking 5 huge capital shifts that are giving us some major clues about what's coming next.
First up, we're looking at a billion-dollar bet from a trio of absolute crypto giants.
Then there's a nearly $700 million rotation from just one legendary investor.
And finally, we'll get into one founder's personal war chest, something that's poised to totally reshape an entire ecosystem. All right, let's dive right in.
Okay, our first story is a big one. It's a landmark institutional move. What we're seeing here is a really coordinated effort to turn Solana into a premier, go-to corporate treasury asset.
You've got Galaxy Digital, Jump Crypto, and Multicoin Capital all teaming up to raise a staggering $1 billion. Now, what's the plan? Well, it's to acquire an existing public company and completely transform it into a dedicated Solana treasury firm. And what's really interesting here is that this has official backing from the Solana Foundation itself. That signals a super deep alignment between the protocol and some major capital.
And this just puts the scale of this into perspective. I mean, a $1 billion treasury, it isn't just large, it would more than double the holdings of the current biggest corporate SOL holder, which is Upexi. Make no mistake, this is a move to corner the institutional market for Solana and completely redefine its role as a reserve asset.
All right, so moving on from that coordinated institutional play, we're now shifting focus to a single but highly influential whale who's making a massive rotation.
Now, this isn't just any old trade. We're talking about a Bitcoin OG, someone who's been in this space for years, swapping a huge chunk of their BTC holdings. And look, when long-dormant wallets like this one start moving, the market pays very close attention. It's a signal of a major shift in high-conviction bets.
I mean, just look at these numbers. This whale just moved 6,000 Bitcoin. That's worth over $689 million directly into Ethereum. This move alone brings their total ETH position to a jaw-dropping $1.28 billion. So what does this tell us? It's not just about taking profits. This is an aggressive billion-dollar bet that Ethereum's rally has a lot further to run.
Okay, next up, we've got a really strategic play from the world's largest exchange. Binance is making a huge move to build out the on-chain economy for stablecoins. And believe me, it is happening fast.
So here's the breakdown. Binance partnered up with this new stablecoin network, Plasma, to bring its native USDT yield product on-chain. The response? It was immediate. I mean, users just flooded in, hitting the $250 million deposit cap in less than an hour. And the incentive is pretty clear, right? They're earning about 2% APR in USDT, plus they get a share of Plasma's new governance token, XPL.
And this quote from Plasma CEO Paul Fex really gets to the heart of the strategy. He says, and I quote, "Distribution is everything." By tapping into Binance's 280 million users, Plasma is making a serious play to become the default network for stablecoins. It's an incredibly powerful way to build a massive user base right from day one.
All right, now let's pivot and look at 2 very different strategies being deployed by some really influential founders. First up, an approach that's all about collaboration and building bridges.
Cardano's Charles Hoskinson is making a really clear multi-step play here to align with the XRP community. So after a successful multi-chain airdrop that actually included XRP holders, he's now confirmed he's in talks with Ripple's CEO. On top of that, he's announced that Cardano's Lace wallet is going to support XRP by the end of this year. This is a huge strategic pivot toward interoperability for them.
And you know what? This outreach is working. The prominent pro-XRP lawyer John Deaton responded really positively, calling it an honor and pleasure to collaborate. This just goes to show you that the strategy isn't just talk. It is a calculated move to build alliances, and it is definitely gaining some real traction.
Now, in sharp contrast to that whole collaborative approach, our final story today is about a founder who's building a self-reliant fortress, and it's backed by an absolutely immense personal treasury.
So this is the core of the strategy. PulseChain's founder, Richard Hart, controls a strategic reserve of over 166,000 ETH. Now, to put that into perspective for you, that's the 5th largest ETH holding among all Layer 2 and fork networks. This is not just some asset on a balance sheet. It is a dynamic war chest.
And this all comes together to create a really powerful 3-part thesis for PulseChain. First, you've got that massive ETH reserve, which can be deployed to inject liquidity at just the right moments. Second, Hart's landmark legal win against the SEC takes a huge regulatory risk off the table. And third, his direct control over liquidity pools lets him basically amplify market movements. It's a whole thesis built on capital, legal clarity, and strategic control.
Okay, so we've just walked through 5 very distinct, very large-scale capital moves. So what does it all mean when you start connecting the dots? So what are the big takeaways? First, it's clear that institutional conviction is moving beyond just Bitcoin and into top-tier alts like Solana. At the same time, you have these individual whales making their own big rotations from Bitcoin to Ethereum. Then you've got the exchanges, which are evolving into full-blown ecosystem builders, actively pushing their users on-chain. And finally, we're seeing these 2 totally different founder philosophies emerge. One is all about building bridges, and the other is about building a fortress.
And this all leads us to the final question. As billions of dollars consolidate around these major plays, who's really building for the future? And who's going to get left behind? That's your daily download. We'll see you tomorrow.